Okay, so we will get into it, guys, and we want to have a look at how the markets are performing today. We've seen quite a lot of movement over the last 24 hours here. And the first thing I really want to point out to you at this point in time is we've had quite a considerable spike on the VIX over the last couple of days. In fact, so far today, we're up just under 6.5% on the day for the volatility index, which measures essentially fear in the market, volatility, and with that, we've seen an inverse relationship with stock market. So we've seen the S&P 500 starting to sell off and breaking through some key levels, which I'll show you very shortly on the chart. And we've also seen some support here for gold and silver. The US dollar index is positioned at a very interesting level at the moment on higher timeframes, following on from the minutes of the FOMC yesterday. So just if we have a look at a quick view here of the relative performance so far this day, you'll note we're currently up on gold, silver for the day right now. We've seen the dollar start to sell off a little bit during the later part of the European session here. And as we go into the US session this afternoon, I'd say other markets which are worth keeping an eye on are certainly some of the agricultural markets like coffee, as well as cocoa, and also cotton as well, which had a 3% surge to the upside yesterday. Today, we'll focus more heavily on gold, on silver, and oil. But with that said, I'll move over quickly just to show you exactly what I mean with respect to the volatility index. So this is the volatility index, which has had a significant spike here to the upside over the last couple of days as we've continued to see volatility in the markets. And with that, we've seen that inverse relationship here, where if we go over to the S&P 500, we can see we've had a breakdown yesterday below the 100-day moving average. We're coming off a major resistance zone off the S&P 500 right now, where it has been breaking down the last couple of days here. And with that said, what does it mean for us as we go into the US session today and as we go into tomorrow as well? Well, essentially, increased volatility in the market is typically supportive for safe havens.